Let's also welcome in the management at Muthoot Finance. George Alexander, MD at the company, is with us. Sir, the company has reported a strong profit of 9% along with robust loan growth, gold loan growth of 5% QOQ. What has contributed?
Because I have been telling last quarter also, there's an uptick in the demand for gold. That's mainly because economic activity has also picked up a bit. And the thing is that some of the NBFCs have stopped lending it. More people are coming to gold finance companies for their loans. So in overall, there is more demand for gold loans coming up now.
Stage 3 assets have been increased of 23% QOQ. What led to the decrease in asset quality, and what was the asset quality trend that you were expecting for this year?
See, when you say asset quality, there is no decrease in the asset quality. What you see as stage 3 or what you call the NPA is just loans which have not been auctioned. So the remedy for all these assets is to auction it at the time of when it becomes a stage 3. But we give little more time to the customer. So please understand that none of these loans which are NPA or stage 3 result in a loan loss. The loan loss for the company for the whole year is just 0.08%. It's just 0.08% of the total assets. So it is negligible. Gold loan companies don't lose any money because of an NPA account. NPA account is just by a flux of time, it has become an NPA. But the gold is there, 100% security is there, the interest cover is also there. So, but if you ask me, today we have a gold loan portfolio of 35,000 crores. But the collateral value of that gold is 55,000 crores. So we have a 146% cover for the gold loans which are good. So NPA for gold loan is just a flux of time. It never results in any principal loss or interest loss.
Okay, let's also talk about the fact that, we have seen heavy floods in Kerala, Maharashtra. Has there been any impact of that on your financials? If you could talk to us about your total exposure here. And also, could we expect any sort of a rise in NPA there?
So we have actually had a same calamity last year also, this time, but it had no impact on our recoveries, or no impact on our business. First of all, the Kerala business for Muthoot is only 4.5% of our total business. So we are not a Kerala-centric company at all. So that's number one. And Bombay also, yes, we have maybe 4-5% business in Maharashtra also. But then the point here is these are gold loans. The customers come and take these gold loans. It's the first priority for people to close. So we have never had, if whatever be the financial position of the customer, he always takes back his gold. We have never had any issue with that. Now, talking to the flood, this time the flood is much lesser than what we had last year. The overall damages, etc., are minimal for the state in Kerala. And for our branches, none of our branches have been affected. They are all working normally.
Okay, Mr. Alexander, what's the outlook on disbursements and any sort of a loan growth figure that you're targeting for FY20?
So this year we should target a minimum of 15% growth in the gold loan business itself. But if things look better and if more funds are coming from the banks, we can think of even 20% growth this year. So it all looks at how much of growth funding company can make. So we are also in the process of issuing new NCDs, listed NCDs, and toying with banks for releasing more funding from the banks for growth capital.
Margins was 20 on a quarter-on-quarter basis. Is this a case of expansion of margins from here on after the cost of funding has got lower?
No, I don't think so, because we have a healthy net interest margin of about 12%, which is definitely healthy. We would always like to keep it there, maybe 0.5% up or 0.5% down. So if the rate of interest goes up, we will also increase the yield or lending rate. If it comes down, we will just certainly pass it on to the customer. So we would like to keep the net interest margin in that level of 12% plus or minus 0.5%.
Thanks, Mr. Alexander. Always good to get your perspective.